The S&P market is likely going higher, but we would not go long right now. Turns out the probabilities have shifted just today. Today's the first day that the momentum indicated that higher prices are coming. Until now, it was all hypothetical, but now we're getting confirmation. And at the same time, the shorter term influences should turn down this week. We're probably right now in the third wave of a 5-wave sequence up. It's near its top, or perhaps reached its top today. And it likely will go down until the 20th of the month and then go up again and make a 5th wave high late in the month of May, potentially even as late as June 6th. Okay? Now, it was pretty obvious I was wrong this week, and the markets did pretty much the opposite of what I would expect to do, pretty much the opposite of what I thought was going to happen over the short period of time. And I feel bad that, people are listening to me. The cycles have not been completely wrong, but they've been distorted. And oftentimes, the more powerful influences, the larger cycles can upset, they can flip, they can do a lot of things to the shorter term influences, making it more difficult to do very short term forecasts. It turns out there are other patterns that we were also considering, the 20-year cycle and the 60-year cycle, that have been bullish and basically bottomed already. There was no confirmation yet that the market had the intention to go up, but the 20-year and 60-year cycle are repeating more closely, and there's reason for it. And now, as of today, there's a clear confirmation of the market wanting to go higher. It's the first time that's actually happened. The price action itself is not sufficient. And there are still some bearish ones, and they're also going to be there, and they're fighting each other. And the downside hasn't happened yet, but it still will show up between now and the middle of June. There will be some down moves that are caused by the down cycles. And you can see in this picture what happens when you combine the bullish combination with the bearish combinations. And it turns out to be kind of a dry and not particularly exciting market, but it ends up going up. Yeah, this is an example of how there are always many cycles running around in the market, but the erratic nature of the rally, the explosiveness of the rally, looks bullish, but it really isn't. It's too shaky. The volume is too light. The gaps that it's left are very, very rarely not filled. Okay, and they likely will be filled before the end of the year when the final high comes in, potentially in August, and it goes back down and gets those gaps. All right. The pullback we were waiting for is still going to happen to some extent, except it won't be a pullback on the way up in the first 5 waves. It'll be a 2-wave or a B-wave decline that should take it down most of the month of June into June 18th, potentially all the way to July 4th. Okay? So it still could be a corrective wave that's meaningful. Price-wise, the most recent price action is not yet at the next major resistance level, which is about 6,000 on our matrix. The longer term matrix, we can see the resistance levels slightly higher than where we have gotten. But the real target probably before it's over in August, we're looking for a high in August, is around 6,300, which will take out the all-time highs before it's done. In the meanwhile, we have a 4th wave and a 5th wave on this immediate sequence, and that should take us up over the 6,000 area, potentially all the way to the 6,300 area. But we don't know that. We just know that more likely we're going to have a 4th wave followed by an up move into the late part of May, a 2-wave, probably a deep one, that could take us back down to the 54 to 5,500 level in June, and that would be the place to buy. Buying right now is late in the game. It's a little risky. And it's also not likely to yield a whole lot of fruits because it's not going to go a whole lot higher in the near term. Okay. Now, what is dominating? The 2005 market, which was one of the cycles we were looking at, the 20-year cycle, is a good model, and this is a picture of it. And the 1965 model also, you can see how it already bottomed, and it's on its way up. That one's even more bullish. We were emphasizing the other two, the 1998 and 1990 patterns, having a retest type pattern before rallying. The 2005 market goes up, but what's interesting is later in the year, this rally is going to get pretty much taken apart. It has a decline from August until October or even December of this year. And most of the price action that has just been, most of the upside action that's just happened will probably get removed even completely by the end of the year. So the fact that it went up this fast is not necessarily a good thing. But once it finishes its blowing off top, which I believe will happen either early June or probably in August, the highest price will probably be slightly above 6,300. And after that, we could go all the way back to the 5,100 area by the end of the year. So the point is, it's not a long-term trend that has started yet. After that, we should go up again after the end of the year into February or April of 2026. And then the bear market, which has been anticipated and we've been talking about forever, should start. So I wouldn't necessarily recommend going long, although it will go higher. I wouldn't recommend going short, at least until late May 27th or June 6th come out as the potential dates for the high. And then we could get a decent sized correction that'll take us back. But the basic storyline is that the astrology that caused the big break, we said that the Saturn-Rahu conjunction was going to happen on the Saturn-Rahu conjunction was going to happen on April 23rd. And the major low before this explosive rally actually came in on May 23rd or 4th. And so as soon as that finished, the market was released. Also, astrologically, the Jupiter moving into Gemini, which is happening this week, is generally a bullish sign for Jupiter, and it will go up potentially for a number of months after stabilizing. It could take a month or two to stabilize. It still could have a decent-sized pullback in June. Now, there's one cycle that we were looking at, the 2002 market, which had a high right here, and another cycle, the 162-week cycle, which has a high right here, and both of them go down hard into late June, okay? Those are likely to still exist. In other words, there's still a downward push coming until late June, but there's also a big upward push, and the upward push is going to ameliorate, it's going to soften the size of the decline that's coming, because it's basically an addition of waves. One of them's going up, the other one's going down. The one that's going down hasn't really gotten going yet, and it will. However, even now, it looks like it's not completely deviating from the timing. We were looking for a high on after the 14th, a high on the 26th or 27th of May. It's still likely the case. And we're also looking for a low on June 18th, still likely the case. But that high is higher than we thought. And the low that came in on the 14th was way higher than we thought. And so the probabilities are it's no longer a pullback on the way up of any significance. Instead, it'll go all the way to the highs, and then it'll have a decent decline afterward, which is another thing that the markets can do, and which the 20-year cycle does do, okay? And that's what we're favoring right now, and you see a picture of it here.